Welcome back to Real Clear Radio Hour, brought to you by the Competitive Enterprise Institute. I'm your host, Bill Frezza. We're very pleased to have with us, calling in from the University of California, Berkeley, Professor of Public Policy Robert Reich, the former Secretary of Labor under Bill Clinton, and a member of President-elect Barack Obama's Economic Transition Advisory Board back in 2008. Secretary Reich, welcome to the show.
Hi, Bill.
Professor, I've asked you on the program as a counterpoint to Grover Norquist because you two have two things in common. You both hold passionate, though opposing views on taxes, and you've both been widely demonized by your political detractors. So before we get into the meat of things...
Wait. I haven't been demonized at all. There are no political detractors. Everybody agrees with me.
It's a good way to start. And I guess I wanted to persuade you to talk a little bit about your formative years and what brought you to your current views. And I am no expert on the matter. I know what I read on the Internet. We have something in common, the two of us. I understand you were bullied as a child, and this helped form your views. Maybe we can start there, and you can talk a little about that.
I think a lot of kids are bullied. I'm not alone. I was very short, always have been for my age, and there were bullies around. And I suppose you could say that at a very early age, I began understanding how it feels not to have power. To not have control, to be humiliated, to feel that the forces are against you. And I think most Americans these days actually do feel that the game is rigged against them.
But rather than learn judo, you learned to speak articulately. That seemed to be your weapon of choice.
Yeah, that's nice of you to say. I didn't learn judo, that's certainly for sure.
Well, you went on, and according to your biography, you did attend Yale with Bill and Hillary. It was quite a group of people. And there are even rumors that you dated Hillary before Bill did.
Yeah, I've heard the same rumor. I do have a vague memory. We went to see a movie once. She was president of her freshman class at Wellesley. I was president of my sophomore class at Dartmouth. We had a presidential... Well, I billed it as a presidential summit. Ah. If she gets to be president, I will have dated a
former...
I mean, that's not bad.
That's something.
People can say that they've dated a president.
That's something to talk about. Well, you've been in government a long time. You've served several presidents. And in fact, when you served in the Carter administration, I was just getting out of college, the economy was a mess. Inflation was raging. Our foreign policy was in shambles. And shortly after Carter left office, the economy took off on a 20-year tear. What did you take away from all that?
Well, I was watching in those years what was happening to incomes. I mean, an economy is an abstraction. The real center of an economy is human beings, and the center of a human being-oriented economy is the median wage. That's the wage smack in the center. Well, what actually happened to wages? And what happened to wages is that wages began leveling out after Reagan. There was almost no trickle down at all, despite
the growth in the economy, which was booming for a long time.
The economy kept growing, but most of the gains went to the very top. Most Americans didn't see those gains.
Well, and it went to the government, too. I mean, you look at total tax revenue since 1980, and there's just been a tsunami of money that's flowed into the federal government.
Well, it goes to the government, and the government doesn't hold it like a bank. I mean, the government spends it, and the real interesting question is, what does the government spend it on? What did the government spend it on? Well, it spent, in the 1980s, we had a huge expenditure on the military, gigantic increase in military spending. Some people call it military Keynesianism, because it was helpful. It did stimulate the economy overall. I think that's one reason.
Was that why they did it, or did they did it to break up the Soviet Union?
I can't get into the heads of the Reagan administration. I never could. I can't now. But I can tell you the economic consequences were that huge military buildup did stimulate the economy. The Keynesian point is that if you use the money that the government gets in revenues to actually spend, particularly in ways that employ a lot of people, then you are going to have a multiplier effect. Each of those people in a paycheck is going to turn around and spend even more.
So when the government takes $1 away from one person in taxes and gives it to another person, that grows the economy?
Well, it all depends. If inequality is raging, and we saw beginning in the late 70s and early 1980s, inequality was increasing. If more and more income is going to the top, people at the top don't generally spend it. Or if they do spend it, their money...
Well, that's where the capital comes from in capitalism, isn't it not?
Well, capital is particularly starting in the 1980s. Investors are coming from all over the world. They're not coming from just the top of the United
But
States.
it's money that's earned that's not spent.
Money that's earned that's not spent by anybody around the world goes into savings, and those savings go into what we might call investment. Some of them goes into speculation. But the point is that beginning in the 1980s, it's not that the government took more and more of total income. It's that the government began to spend a lot of income that the government was getting on all sorts of things. Military Keynesianism, that military buildup was a big part of it. But it was also, increasing.
Well, it's been growing without bounds.
Structure. We did spend more on schools, not as much as I think we should have. And but the proof of the pudding, in terms of whether the economy is actually working for people, is what happens to the typical person's wage. And what we saw beginning of the Reagan administration is that the typical person's wage, even though the economy was growing, those typical wages were going absolutely nowhere.
Is it the wage or what you can buy with that wage that matters?
Well, for the typical person, yes. It's what you can turn around and buy. It's basically your standard of living. I mean, the standard of living depends on two things. What you can buy, but it also depends on public goods. That is, the quality of schools, the quality of roads, the quality of your air, the quality of...
Well, let's look at a couple of things. The kind of telephone I could buy in 1980 is very different than the kind of telephone I could buy today. Long distance was $1 a minute. Now it's free. So even if I have the same wages, is my standard of living going up or going down when it comes to that sector of the economy?
In many respects, your standard of living is going up. We have in fact, the government, the Department of Commerce, and also the Labor Department have what they call deflators. Those are ways of measuring what the value of a dollar is today relative to what the value of a dollar was, let's say, 10 or 15 or 20 or 60 years ago. And the value of a dollar in terms of what it can actually purchase. Now, certain things technologically are getting much, much better.
TVs, cell phones,
cheap, such as
computers,
such as airfare, and such as telecommunications.
Quality of my car.
Your car.
It's a lot safer now than it was in the 80s, and it doesn't pollute as much as it did.
Yeah, and that's because government was regulating, and those regulations did pay off. There are other things, though, such as healthcare, higher education, homes, housing prices, that have all gone up faster than inflation, or at least faster than what most people allocated to those particular kinds of goods and services starting in the late 1970s. So you have a mixed picture, because adjusted for inflation, given all of these changes in purchasing power, the good things and the bad things, most Americans today are just about where they were. In fact, by some measures, they're worse off than they were when Ronald Reagan started cutting taxes, and we had that big experiment with supply-side economics.
Before we get on to taxes, let's look at the two worlds of things that got better during those years and things that got more expensive during those years. On the one side, we've got telecommunications, we've got our automobiles, we've got our TV sets, we've got air travel. On the other side, we have things like education. What's the difference between those two sectors, the ones that improved and the ones that got more expensive but didn't improve?
Well, the sectors that improved were mostly high-technology sectors. Autos, we can have a debate about. I mean, some people would say autos are safer today, and that is because of government regulation, and they are also more fuel efficient. But in terms of purchasing power, the automobile today is probably just as expensive, if not more expensive, as the automobile was before. Education, higher education is more expensive. Healthcare is more expensive. And homes, generally, a much higher portion of the paycheck of the typical person is spent on mortgages and rents today than was spent in the 1980s.
And what was government involvement in the education business and the healthcare business over those years?
Government is involved in almost every business, in high-tech research and development. A lot of R&D comes out of the Defense Department, a lot of that supported the R&D revolution starting in the 1960s and 70s and 80s. The Internet, all of what we know about computers came out of the Defense Department. Government has also been very actively involved in certainly higher education with regard to defense and NSA, National Science
Well, and
Foundation
K through 12 education, too. Let's not forget, the government runs K through 12 education.
K through 12 education is not where the expense was. Most people still do not pay directly for K through 12 education. I'm talking about higher education. That's what's gone up faster than inflation, or faster, takes a larger portion of most families' paychecks. With regard to housing, like every sector, the government's involved. It has been involved in providing subsidized loans.
Now, how did that work out?
Well, most people would say that the big government, Fannie Mae and Freddie Mac, they did not do well at all, although most people today still want to hold on to the mortgage interest deduction, which is much bigger and plays historically a much bigger part in home purchases than Fannie Mae or Freddie Mac ever did.
Well, let's get on to taxes, since that's really the subject of the day. And in fact, you've been quoted, as many people have quoted Oliver Wendell Holmes, when he said the taxes are what we pay for a civilized society.
Yep.
When Holmes left the Supreme Court in 1932, both the federal government and the tax burden carried by U.S. citizens was a tiny fraction of what it is today. What do you think his views would be now if he saw how large government has grown?
Well, I think the first thing he would ask, and I'm judging from the little bit I know, and I know some of his cases, and I've read some of his writings, I think Oliver Wendell Holmes would say, well, who is government actually working for? Is it working for people, or is it working for the wealthy? If you look at corporate welfare, if you look at all sorts of subsidies, if you look at bailouts of Wall Street, you might conclude that a lot of what government does is actually working for big corporations and the wealthy rather than average working people. I don't think Oliver Wendell Holmes would have liked that at all.
Good for him. What about its major function? If you just look at the budget and you say, what is the major function of the federal government? It's transfer payments.
No, you're wrong about that. Military is still very, very large. The second is transfer payments, but those transfer payments are basically Medicare, Medicaid, and Social Security. And to the extent that somebody says they're transfer payments, you still have got to understand that people pay into Social Security more than they get out of it these days, and they have for the last 20 years. To call Social Security a transfer payment basically doesn't understand that the baby boomers' Social Security payments have been subsidizing the rest of the federal government for at least 25 years.
Right, the money's all been borrowed and spent.
I'm sorry?
All the money that I sent off to Washington in Social Security taxes has been borrowed and spent. There's a bunch of IOUs left.
What we have been sending for the last 25 years to the Social Security Trust Fund, not all of it has been spent, but a lot of it has been spent by the government on other things, on everything from roads and bridges and education, all the way through some welfare payments, although there's not much welfare left after Bill Clinton got rid of welfare in 1996.
Unless you count Social Security disability, so that's gotten very large.
Social Security disability has gotten large, but that's only been in recent years as the economy has faltered.
Let's look at the tax situation right now. Should taxes be paid by everyone, or the large swaths of the population by virtue of the circumstances that shouldn't pay taxes?
There's a big debate about that. My own view is that everybody should pay taxes, and everybody does pay taxes. State and local taxes are about 40% of total government revenues. State and local taxes are mostly sales taxes and fees and property taxes, and those all impose a much larger burden on very poor people than they do wealthy people because they take a bigger bite out of their paychecks.
So when you do the math, does it flatten things out? If the bottom of the income scale is paying fees and non-income related taxes, sales taxes, and the top of the income scale is paying income taxes, when you're all done with it, how flat does that look?
Well, it doesn't look very flat. It looks like the wealthy are actually paying a smaller percentage of their incomes overall than the poor are, or the lower middle class is.
And how would you sort that out?
You mean what to do about it?
Yeah.
Oh, I try to make the whole tax system progressive. Even Adam Smith, the great laissez-faire philosopher of the economy in the 18th century, said that the rich should pay not just the same percentage of their income as the poor, but actually should pay more than that, because you want to equalize the sacrifice, the pain, and 10% of a millionaire's income every year is far less painful than 10% of somebody who's earning only $10,000.
When you do that, when you equalize or increase the sacrifice or pain that are felt by different people, the poor don't have a lot of options. They still have to get up and work, to go to work in the morning. The rich have a lot of options. They can switch from taxed investments to untaxed investments. They can decide to buy back stock rather than invest in growth. Do you think their behavior changes when you increase their pain, or do you think they're impervious to it?
Well, we know that, and we have a lot of data on this, that before the Reagan tax cuts in 1981, the rich were paying much higher percentage of their income than they were after that. That is, the official marginal tax rate on the rich was never below 70% between the end of the Second World War
but very few people paid that.
Ronald Reagan's tax cut. And even if you did take into consideration all of the tax deductions and tax credits, you find that the rich were still at the top, having a top marginal tax income tax rate of over 50%, much, much higher than we've had since then. Did it change their behavior? Was there a lot of tax avoidance? Well, the data tell us not all that much. They certainly, again, some very wealthy tried to hide their income or tried to create as many tax avoidance schemes.
I mean, it's not that hard. You buy T-bills. You don't pay taxes on T-bills.
Well, if you say it's not that hard to avoid taxes, you're absolutely wrong.
But taxes are voluntary. It's very easzy to avoid taxes.
If the IRS is doing their job. Now, granted, actually, there are two separate issues here, Bill, and we don't want to confuse them.
Okay.
One issue has to do with the ability of the wealthy, because they have a lot of political power, to get big tax loopholes. I mean, like the carried interest loophole that allows hedge fund managers,
the tax code is a piece of Swiss cheese,
to treat their income as capital gains. I mean, that's $12 billion a year that they avoid paying in taxes. But then there are other kinds of things that are not exactly loopholes that are created by the wealthy. They are basically tax minimizing schemes that everybody can use. And the mortgage interest deduction, the problem there is that the wealthy get a much bigger mortgage interest deduction overall than average working people, because they're deducting more interest on much, much larger mortgages.
If you're trying to change their behavior, it takes more to move the needle. George Bush is famous or infamous for his tax rate cuts. And yet, if you look at the numbers, in his 8 years in office, he collected $1 trillion more from the rich than Bill Clinton did. How did that happen?
Well, there are two things that you, again, hear that are often confused. I mean, the actual amount of taxes that are collected is one thing.
Went way up under Bush. He was the biggest tax collector in history.
He was a big tax collector, but he also spent a great deal. We ended the 1990s, Bill Clinton, with a huge budget surplus that George W. Bush
pissed it away.
He basically dissipated. He threw it away.
Yeah, but how did he manage to suck $1 trillion more out of the rich by cutting their tax rates?
Well, a lot of that, remember, was corporate taxes as well.
Well, no, I'm just looking at personal income taxes. I can find the right spots on the web, and you do the arithmetic, you run the spreadsheet, and you look at personal income taxes for his 8 years versus Clinton's 8 years, and he collected $1 trillion more, and most of it came from the top. In fact, the lower half paid less under Bush than they did under Clinton.
But what's your point? Because
how did that happen?
What we've had, for average people, what we have faced after Reagan and then after the two Bushes is, number one, huge federal debts, and number two, median wages that keep on dropping.
So you're arguing to cut spending, which I think you won't find much argument there. But I'm just, how is it that a tax rate cut produced $1 trillion more in tax revenue?
Well, I suppose, what supply-siders would say is that if you cut their rates, they are not going to try to avoid that much in terms of paying their taxes. Some supply-siders say that if you cut their rates, they're going to work harder. But that notion expanded to the entire economy proves way too much. I mean, if you give people more money to take home, if you allow them to
keep
do
more of what they earn
better, are they going to work that much harder? We have comparisons of low tax rates and high tax rates, different times in our nation's history when the marginal income tax on the wealthy was high or low, and they're all over the place. I mean, one thing we do know, though, that between 1946 and 1981, the economy grew faster than it grew after Ronald Reagan dropped the marginal income tax. So if your test is how fast is the economy growing, or if your test is how is the median worker doing, or if your test is anything that most people care about, those tax cuts, both the Reagan tax cuts and also the George W. Bush tax cuts, were both terrible, big failures.
Even though it brought in $1 trillion more, is terrible.
But wait, Bill, you don't have to be snarky about it. I mean,
I apologize.
No, that's perfectly fine. I mean, the thing is that these national income accounts are notoriously difficult to follow because some of the money that comes in is coming in from different years. They're using it in different years. The budgeting games that are going on.
You have to take a long view.
You've got to look at data sets that you can pretty much rely on. And the only data sets that I know that are really very reliable happen to be the ones that most people care most about. And that is, what is my income? Is it going up or going down in real terms, adjusted for inflation, that takes into consideration technological changes, takes into consideration good things and bad things, and also what's happening to the overall economy, what's happening to the overall debt. When you look at all of these things, you see that when between 1946 and 1981, we had higher marginal income taxes on the very wealthy. The economy grew faster. People's incomes, the typical average and median income went up faster. Inequality dropped in the United States. And then you compare that to after the Ronald Reagan tax cuts, and all of those basic indicators went in the opposite direction. Economy slowed, median wages actually started to stagnate and in many cases drop, and you had a larger and larger budget deficit, particularly after George W. Bush.
There are a lot of factors, and it's hard to do the comparisons because the world was so different between 46 and 81 and between 81 and today. What portion of the total federal income tax burden do you think it would be fair to ask the top 10% of income earners to pay?
Instead of just limiting it to federal income taxes, I would look at total taxes.
What percent of the total taxes do you think it would be fair to ask the top 10% to pay?
I think in terms of total taxes, I think the top 1% ought to probably pay, if we're talking about progressive, we can debate about it. I mean,
I'm just asking your opinion. This is a fairness opinion.
It could be 15% of total taxes. It could be 20% of total taxes, but they're not paying nearly 20% of total taxes.
And the top 10%, how much should they pay?
I would say, since they are paying, in fact, I can get, do you want to wait and I'll get you the data?
No, I'm not due. What should? What is a fair amount to ask 1 out of 10 citizens in the country to carry?
Oh, you mean the top 10%?
Top 10%.
I think the top 10% probably ought to be paying maybe a third of total taxes, or maybe conceivably 40% of total taxes. But, there have been a lot of surveys asking average people or even people who are very wealthy, what percentage should the top 10% be paying? What should the top 20% be paying? And most people say the top 10% should be paying something in the area of, 30 to 40% of total taxes. The rich are richer than they've ever been. Their marginal income tax rates are lower than they've been at any time in the past 70 years. They are, if you include local and state taxes, they are paying actually a lower percentage of the total tax burden than they've paid in 75 years.
And yet they're paying more in total revenue than they ever have. So their percentage is low, but the total dollars being forked over to the government has never been higher.
Well, are you talking about? Of course, but The rich have never earned that much.
Okay, so and that money gets used.
Money is money. To say that the total nominal amount of dollars is more than ever before is a meaningless statement.
What's more important, the amount of dollars that are going to Washington, or the amount of pain?
You've got to talk about percentages of total income.
Why?
The numbers.
The number of dollars are not as important.
Nominal dollars is just a silly measure. The measures that I gave you a moment ago, in terms of the percentage that they're paying in total taxes, all sorts of taxes, state, federal, Social Security, and income, capital gains, relative to their incomes, is lower than it has been in 75 years.
So when President Obama was quoted as saying that he wants to raise tax rates on the rich, even if that reduces the nominal dollars they send to the federal government, so the total revenue goes down, you would agree with that?
No, I wouldn't agree with that. In fact, I think that we want to, here's where Art Laffer and I agree, and I really like Art. He's a good guy. I disagree with him on most stuff. But he and I would agree that you want to keep at least consideration of what kind of tax scheme is going to maximize the amount of taxes actually paid. You don't... The
nominal amount.
It doesn't make sense to encourage people to either use a lot of tax avoidance schemes on the one hand or not work very hard on the other. So obviously these things have an effect. But what I'm emphasizing with you is that if you compare post-Reagan years to pre-Reagan years, that is post-war 1946 to 1981, compared to
you've mentioned
after Ronald Reagan lowered taxes, what you find is that the economy grew faster in the earlier period. Median wages grew as opposed to median wages dropping. The federal deficit was actually coming down in the earlier period, and then in the latter period it was going up. And so discussions about nominal dollars and discussions about many of these other things just avoids the big and important comparison.
There are a lot of prominent rich people who are upset because they don't think the rich pay enough taxes. How many of them donate the difference between what they actually pay and what they think they should pay to the government to make up for their unfair windfall?
I really have no idea, but I'll tell you that's why that question is not particularly relevant. I've heard right-wingers make that claim that, if Warren Buffett thinks that he ought to be paying more taxes and people like him should be paying more taxes, then he should voluntarily do it. No, the point is, what are the rules of the game going to be for everyone? And what Warren Buffett is saying is not that he personally ought to be paying more. He's saying that people who are earning as much as him, including him, ought to be paying more. Because if they don't pay more, then what does that mean? It means that more of the tax burden is on the rest of us, or many of us have to do without some of the services.
But meanwhile, he owes it to his shareholders to take tax minimization strategies throughout his companies.
Right.
Which he does. He's famous for reducing his corporate tax bill by taking advantage of every loophole that's been created.
There is a difference, on the one hand, between taking advantage of a loophole and doing it entirely legally, and secondly, using your wealth and power either to create and expand loopholes, which is a lot of what very wealthy people and big corporations are doing, or on the other hand, as Warren Buffett is trying to do, use your wealth and power and influence to actually change the rules in a more progressive direction. And I would say, if wealthy people are going to have a lot of power, then I would applaud the second strategy rather than the first.
Secretary Reich, you've been a great sport. It's been delightful. I hope I get to meet you in person someday. Thanks for being on the show.
Well, thank you, Bill.
That wraps up our show for this week. You've been listening to Robert Reich, Professor of Public Policy at Berkeley and former Secretary of Labor, here on Real Clear Radio Hour, brought to you by the Competitive Enterprise Institute. See you next week. And for those who actually pay income taxes, don't forget to get those returns in the mail by Tuesday.